What's going on, guys? Franco here with Trading Futures Live. I want to talk to you about how I choose my zones. When I'm trading, I like to draw zones and then from there either sell or buy. Right? I have a very structured plan. I mostly don't do breakouts or any random trades. I like to have areas to trade from. And one of the elements that I use to choose those zones are the location, right? And for the location, before I tell you how I choose the location for any given zone, I need to explain a couple of things to you before. Market have some sort of behavior patterns, right? So the market moves in troughs and corrective moves. So we have a uptrend here. This is the NQ chart, right? This is an uptrend. We do have an impulsive move to the upside and a corrective move, and then an impulsive move and a corrective move. And we attempted to change trend here, but ultimately buyers were stronger. And then we had an impulsive move and then a corrective move and an impulsive move and then a corrective move. So what is important about the behavior of the market is that the market behaves this way in all time frames. That means that the market by definition is fractal. If you go down in time frame, which we will point later in this video, you will understand that the market is fractal by definition. You will find the same patterns in all time frames, right? And that means that you can find the same structure in lower time frame and lower your risk and try to put a trade with less risk and more risk and reward ratio. Okay, so but understanding that the market moves this way makes you more realistic in at the time of choosing where to trade from. Why? Because you cannot expect the market to move parabolic every day. It can happen, and it does happen about 1 to 2% of the times regarding the days. But overall, the market moved in impulsive and corrective moves, right? So that gives you a more realistic approach where to trade from. Okay, so with that, I also use trend lines, and trend lines are a very subjective point. Different traders use them very differently. For me, is connecting two dots and extending to the right just to try to assess where the third touch might happen, right? And I say might, and this is a very capital might word, because it all depends on the environment or the what is happening in any given day, the context for the market, right? But for instance, if we have a downtrend, I would like to connect the highs. So this is the downtrend that started in December for the NQ, and I don't think trend lines are things influencing the market, but other traders use them the same way I use them. So it might be a self-fulfilling prophecy, and that is why another topic that I use is that past behavior, because everything we have in the charts, right, everything we see is past behavior, what already happened in the market. Anything can happen in the future, but in the past, that's what we got in the chart. Okay, so but past behavior in the market influence futures behavior, right, in normal circumstances. Now, and I want to highlight that normal circumstances, because if something happens, you have an economic news report coming out, or you have a president of the Fed giving a speech, or being in the Senate, right, speaking in the Senate, you can have market movement that are not in a normal circumstance, right? So I tell you that because you have some degree of probability for our areas to work. They're not infallible, and you need to understand, if you want to be a professional trader, that you need to start thinking in probabilities. That's one of the golden rules that I have worked on for the last 3 years, to understand that my trading is not 99% sure. As a matter of fact, I lose the majority of my trades. I lose 58% of my trades. But that 42% of my winning trades, actually 42% account for break-even trades and winning trades. So that 42% and about 25 to 30% of winning trade make the money for me, right? All right, so so continuing talking about the trend lines, this just tell me where the downtrend can be broken. And I tell you, when I am assessing the downtrend, I like to connect the highs, lower highs, right? And when I am assessing a uptrend, I want to connect the lows. That's it. Because when you have a uptrend, you can have a lower high, like in this case. And I was saying when we were checking this uptrend, the impulsive move and corrective move, that we attempted here to trend change here, right? Because we made a lower high, but ultimately buyers were stronger and pushed price to the upside. Okay, so I want to see where the trend is ultimately broken. So if you see here, buyers tried to defend this trend line, and then finally was broken to the downside. Okay, so the point where the trend line is broken is a very important point for me, right? So I want to look for formations regarding that location. So that is one location that I care about, right? For instance, here we broke to the downside, and I know this is after the fact, but that's the only way for me to explain to you. So if we broke this to the downside, right here. So this is a drop-based drop formation. We tested once and we tested twice, creating lower lows. So the downtrend was actually continued from here, right? And since this trend was created, we haven't broken to the upside. Yes, at this time we are creating lower highs right here. Lower highs, and this sort of like trend line is holding right now, but we are creating this wedge right here. So it all depends of where the price will go, right? But if we ultimately break this to the upside, right, I would say that this part of the chart where the trend line was broken is a very important location. Okay, and I wanna point out that this is a high probability or high possibility in the markets. Whereas if we continue and we test this again, we might have again a drop and a continuation. We will see what could happen the following days, but this is how I try to find my locations. Now, trend lines is just one leg of the table that I use, right? I like to use two other important elements for my locations, right? I've talked about volume. If you see me every time on my live, I want to go for areas where high volume is concentrated. And those areas are between 9:30 in the morning and 10:30 in the morning. So I do trade areas created at that time. Those are the highest probability that I have found. Sometimes I could do an 11 a.m., but the probability for it to work is lower, right? And I want to prove that to you on the this is the 4-hour chart, and I want to show you this, right? So this is a trend line that we had here. We already knew that this was a trend line, and I want to tell you the downtrend was up to here, right? When this is the last pivot created on the downtrend, And I mean on the 4 hours, because we already saw that this pivot corresponds to a daily trend line, right? But like I said in the beginning, the markets are fractal, and they can, if you go down in time frame, you can find the same patterns. You don't need to wait for a daily setup to show up for you to trade. You can go down. You can go down to the 4 hours. I like to go down up to the 500 volume bar, right? All right. So if we continue here, if we see this downtrend, let me see right here. If we see this downtrend, right? We did have this. So we had this pivot, we have this pivot, and then we had this pivot, right? So up to this point, everyone is thinking, all right, this thing might collapse to the downside, right? But what in reality, what happened is that we created a lower low, sorry, a higher low, right? So this higher low is signaling for me a trend change, right? Not yet, definitely, right? But all right, the sellers were not too strong to keep moving price down, right? And what we had here was a break of the trend line to the upside, right? We did not break this pivot here, meaning this red line, we did not break it. So sellers were very active here, but were active to a degree, right? Where the buyers were very present here, and then we trade in a range for a couple days, for a few days, couple weeks, but we couldn't break the low of the previous high. So we are actually creating a higher low in this pattern, right? So we finally broke to the upside, and when we broke to the upside, we created this pivot. Okay, so this pivot is more like a continuation pattern, or I would call more noise, right? Because there are some sellers here, but actually they're not strong enough to keep moving the price down. Even though this is a very hard or sharp drop in the Nasdaq, it was 700 points almost, or 600 points. We're looking at the 4-hour chart. So I want to point out that this could happen in a very lower time frame. Now, the lower time frame, the more noise that you will find. Okay, so my point is, all right, we broke this. So we finally broke to the upside, and then we continued to the upside, right? So every time we have a continuation, we have a corrective move, and this was the corrective move. I want to point out how the importance of the candles closing at 10 a.m. or 10:30 a.m., right? Those are the higher candles, the higher volume candles. So, for instance, we broke this pivot, which is the last pivot of the trend line. We created a higher low. We finally broke. We sustained the trend line, and then we're breaking to the upside. And we are in another trend line right here, right? So the market moves in impulsive, corrective, impulsive, corrective, impulsive, corrective, and impulsive until we break to the downside. So where is the pivot that you think this is finally creating a new low? So this is the last pivot of the uptrend. So I will mark, like I did mark here, this is the last pivot of the uptrend, right? So I do have all these to trade from, and I do have all these to trade from, right? And I want to point out that I do want some sort of consolidation area or a retest, right? And when I say a retest, I want to say a candle with higher volume. If we come here and we put volume, right? Within this, I do have this one. I do have this one. I do have this one is lower volume. I do have this one, right? There we go. And here, I do have this one. And I do have, actually that's the only one that I have. Let me open up this. There you go. So you have this candle. So this is one of my zones, right? It came very close, never filled in. And here you could have this one. Let me get rid of this. Now you have this retest, but this is overly tested, meaning price went very deep into the candle. So this is the candle, right? It went very deep into the candle. So I discard this one for freshness. I need something that it hasn't been used yet, and I have this one. This one is lower volume, right? But is a candle that closes at 2 in the afternoon. That means as a 4-hour candle, I can include these two, and I will include this one. There we go. Get rid of this line, and then you can check where price is bouncing from, right? I do think this trend line is being tested right now on the daily. Sorry, this trend line is not being tested on the daily. This is the 4-hour. This is the 4-hour trend that we created right here, right? So we are testing it right now. Today market close. So we'll see next week if we have a break to the upside. This will be a supply zone for a counter trend trade. If we hold here, we might have a continuation here, and we can come to a lower zone and a corrective move right here, right? And we'll see if we can hold these trend lines, right? So those are the scenarios that I draw every day, right? And this is shown on the 4-hour chart. You can go down in time frame and do this practice the entire weekend, so you learn more about market behavior and how the structure of the market works, right? So this is a simple video. If you have any question, please comment down below. Like I said, these areas just enhance my probability of choosing good zones. That doesn't mean they will not fail. There is nothing infallible that a trader can do. If you're perfect, if you don't make mistakes, which is very hard, but if you don't make mistakes, you still can lose for factors that are external to your trading. So you need to consider the mistakes that you make and how random is the market. Okay? So with that, I'm going to wrap up this video. So please leave your comment down below if you have any question. And please hit that notification button, because I go live 8:25 every morning and 9:25 for the live trading session. 8:25 for the pre-market and 9:25 for the live trading session. For now, I will leave you and see you guys next week. Thank you.